Welcome to my channel. For more updates, please do subscribe the channel. Financial inclusion may be defined as the process of ensuring access to financial services and timely and adequate credit where needed by vulnerable groups such as weaker sections and low-income groups at an affordable cost. In a diverse country like India, financial inclusion is a critical part of the development process. Since independence, the combined efforts of successive governments, regulatory institutions, and the civil society have helped in increasing the financial inclusion net in the country. The state of financial inclusion has improved considerably over time. However, the financial inclusion hasn't reached the poorest of the poor, and there exist many bottlenecks and challenges which need immediate attention. Thus, there exists both a great need and the potential to tap into the unbanked population and bring them into the financial net. Financial inclusion initiatives. Jan Dhan Aadhaar Mobile, JAM, Trinity. The combination of Aadhaar, PMJD, and a surge in mobile communication has reshaped the way citizens access government services. As per the estimates in March 2020, the total number of beneficiaries under Jan Dhan scheme have been more than 380 million. Expansion of financial services in rural and semi-urban areas. Reserve Bank of India, RBI, and National Bank for Agriculture and Rural Development, NABARD, have taken initiatives to promote financial inclusion in rural areas. These include the opening of bank branches in remote areas, issuing Kisan Credit Cards, KCC, linkage of self-help groups, SHGs, with banks, increasing the number of automated teller machines, ATMs, business correspondence model of banking, etc. Promotion of digital payments. With the strengthening of the Unified Payment Interface, UPI, by NPCI, digital payments have been made secure, compared to the past. The Aadhaar-enabled payment system, AEPS, enables an Aadhaar-enabled bank account, AEBA, to be used at any place and at any time, using micro ATMs. The payment system has been made more accessible due to offline transaction enabling platforms, like Unstructured Supplementary Service Data, USSD, which makes it possible to use mobile banking services without internet, even on a basic mobile handset. Enhancing financial literacy. The Reserve Bank of India has undertaken a project titled Project Financial Literacy. The objective of the project is to disseminate information regarding the central bank and general banking concepts to various target groups, including school and college-going children, women, rural and urban poor, defense personnel and senior citizens. Pocket Money is Securities and Exchange Board of India, SEBI, and National Institute of Securities Markets, NISM's, flagship program aimed at increasing financial literacy among school students. The objective is to help school students understand the value of money and the importance of saving, investing and financial planning. Financial inclusion, success story. Increased access to banks. According to the World Bank's Global Financial Inclusion Database or Global Findex report, 2017, 80% Indian adults have a bank account against the 53% estimated in 2014. The Findex 2017 report also estimates that 77% Indian women have bank accounts, against 43% in 2014. Enhancing active participation of citizenry. Earlier, private institutions did not engage with the poor as customers on a significant scale. This has now changed, and there has been an active participation of the private players, payment banks like Paytm, Airtel Money and Jio Money, as they have also realized that bringing the poor into the financial net is beneficial to their business models as well. Integration of financial services. The convergence of JAM Trinity with the Direct Benefit Transfer, DBT, scheme has largely been successful. Due to this, there has been a significant improvement in terms of targeted and accurate payments. It has also helped in weeding out duplication of entries, and bringing down the reliance on cash mode of payments. Associated challenges. Non-universal access to bank accounts. Bank accounts are a gateway to all financial services. But, according to a report by the World Bank, about 190 million adults in India do not have a bank account, making India the world's second largest nation in terms of unbanked population after China. Digital divide. The most common barriers to the adoption of digital technology which may promote financial inclusion. Non-availability of suitable financial products. Lack of skills among the stakeholders to use digital services. Infrastructural issues. Low-income consumers who are not able to afford the technology required to access digital services. Informal and cash-dominated economy. India is the heavily dominated cash economy. This poses a challenge for digital payment adoption. Also, according to the International Labour Organization, ILO, about 81% of the employed persons in India work in the informal sector. The combination of a huge informal sector along with a high dependence on cash mode of transaction poses an impediment to digital financial inclusion. Gender gap in financial inclusion. According to the 2017 Global Findex database, 83% of males above 15 years of age in India held accounts at a financial institution in 2017 compared to 77% females. This is attributed to socio-economic factors, including the availability of mobile handset and internet data facility being higher among men than women. Lack of credit penetration. One of the main constraints in providing credit to low-income households and informal businesses is the lack of information available with formal creditors to determine their creditworthiness. This results in a high cost of credit. Due to this, in 2016, the number of loan accounts per 1,000 adults was 154 in India. This is quite low when compared to similarly placed economies like BRICS nations. Steps to be taken. Reviving banking correspondent model. Need for data protection regime. Leveraging differentiated banks. Promoting USSD for rural areas. Conclusion. For the success of financial inclusion in India, there has to be a multidimensional approach through which existing digital platforms, infrastructure, human resources, and policy frameworks are strengthened and new technological innovations should be promoted. If adequate measures are taken to tide over the existing problems, financial inclusion has the potential to amplify the benefits of economic growth to the poor.